For being one of the largest companies and one of the most popular stocks out there, Apple stock has actually been a bit volatile in recent history, and I would argue that it's also been very polarizing as well. See, Apple bulls would argue that this is a company that will always find ways to continue growing in the future, and it is one of the safest long-term investments out there that many would consider to be an easy money stock in the market. On the other hand, Apple bears would argue that they are still heavily reliant on iPhone sales that have recently come to a screeching halt because of a lack of innovation and high prices. So who's right in all of this? And as we enter the second half of 2019, is the stock still a buy, or are there too many concerns on top of weaker performance out in China to scare investors away from purchasing the stock? Well, in today's video, I want to share my thoughts on all of that and a lot more. I hope you guys enjoy this. Let's get started. What's up everyone, my name is Ale and welcome back to my world of stocks. Since we're talking about Apple stock, let's go ahead and start by pulling up the chart. Okay, now we know that the stock is up by over 100% in the past 5 years, but more recently the stock took a nasty hit at the end of last year with the rest of the market, but Apple in particular took a lot of damage because of slowing iPhone sales and performance issues that they have in China, but we'll talk more about that in just a second. So far in 2019, the stock has surged higher in recovery, having now climbed by over 27%, but it's still down about 14% off of their highs that they saw last year and currently sit at about the midpoint of their 52-week range. On the bright side, the recent dips have led to what many consider to be a pretty attractive valuation for an otherwise great company, with their forward PE ratio sitting at just 15.7 according to Yahoo Finance. Seeking Alpha has it a little higher at over 17, but the sector median is almost double that at over 31. And speaking about the attractive valuation, Apple also comes with a pretty attractive dividend that only yields about 1.5% right now, but thanks to an amazing balance sheet, solid profitability, and a very low payout ratio of just around 25%, they've been able to grow that dividend at a double-digit percentage during the past 5 years, with 6 years of consecutive growth, which is when they started paying it in the first place. So in my opinion, this is a dividend that is likely to get much bigger in the future, and for that reason, I consider Apple to be a little bit of a dividend growth stock as well. Having said that, there's a reason why this stock has stayed at these levels, despite being one of the most popularly branded companies in the world. So let's now transition to their sales and performance, and then we'll take a look at their issues and what they can do to fix them going forward. Now, if we look at their sales for the past 4 years, there isn't gigantic growth, but you're still talking about over $260 billion in sales last year alone. Translated into profits, you're talking about $60 billion of net income. That's obviously huge profits, but when you take a closer look at their last 8 quarters, you can see that slowing iPhone sales have really started to take a toll on their growth, as sales have been a bit up and down lately, but overall relatively stagnant. In fact, if we convert these into year-over-year figures, their sales actually dropped in the last 2 quarters by almost 5% each. A big reason for this is again due to slowing iPhone sales, which you can see on this chart here that they were absolutely surging just a few years ago, but have since hit a wall, with growth becoming relatively flat since 2015, with their last quarter seeing iPhone sales drop by over 17% year over year. That's a big deal considering that it's by far the company's largest segment. Much of the blame for the poor performance, at least recently, has been placed on China, given that their economy continues to weaken, as you can see on this chart here that shows GDP annual growth rates for the past decade. And more recently, the trade war between the US and China has made things even worse, with a ban on Huawei leading to Chinese nationalists refusing to purchase iPhones in support of their home country's brand. That ban has since been sort of lifted, but we'll take a closer look at that in just a second. First, I want to explain why all the negativity in China is a big deal, and that has to do with 2 primary reasons. Number one is that 18% of Apple's sales actually come from the China region, making it the third largest region by revenue, even though it's probably the region where they arguably have the most growth potential. But speaking of growth, that leads me to reason number 2, which is that not only are they not seeing any right now, but they're actually losing market share while Huawei continues to surge higher, at least as reported by Canalys Research through the first quarter of this year. So all of that, coupled with higher prices for iPhones that haven't really changed by much in recent years, has led to all of this negativity. But in my opinion, that's really where most of that negativity stops. So let's now transition to the positives. And in my opinion, there's really 3 kind of catalysts going forward. And so one would be changes in China. Number 2 would be changes to their iPhones. And then number 3 would be the diversification away from the dependency on their iPhone sales. Going forward, China has implemented new stimulus this year to help improve their economy, and I expect that to continue to be the case in the near future, given that their economy is in desperate need of it. Another thing to consider is that while there was a lot of negativity surrounding the whole trade war recently, the newest update coming from the G20 summit, where President Trump met with President Xi, looks to be pretty positive, as the two have agreed to a ceasefire, and Trump will reportedly not be adding the 25% tariffs to the remaining $300 billion worth of goods from China, while Xi has agreed to purchase more farm products from the US as the two countries reopen trade negotiations. On top of that, Trump has also agreed to ease restrictions on Huawei, allowing them to once again do business with US companies, although it still isn't clear how far this goes, and several websites are reporting that there may still be certain restrictions in place, but it's at least a move in the right direction if you're someone who wanted to see the ban get lifted. And while the 25% tariffs remain on $200 billion worth of goods, this ultimately seems to be good news for the long term, since it means that the trade war won't be escalating, at least for the time being, and the easing of Huawei's ban should hopefully lead to Apple's boycott in China being a bit less severe than it otherwise has or would be in the future. And while there is still a bit of uncertainty surrounding iPhone sales, it's not like Apple hasn't been investing heavily in other areas to lower their dependency on that segment, which is in large part thanks to a strong balance sheet that carries over $120 billion of just current assets alone. Don't get me wrong, they certainly do carry a lot of debt, but they also have a lot of long-term investments under their total assets category, and you can't forget that this is a company that does about $60 billion a year of pure net income, so debt levels are not really a concern for me when all things are considered. At the end of the day, they have plenty of cash to make almost any move that they want. In fact, it was recently reported that they were even trying to acquire Tesla at one point. Speaking of which, they still seem to be investing heavily in autonomous driving, which has mostly been a mysterious new venture for them that they don't often talk about, but most recently they acquired an autonomous vehicle startup called Drive.ai that was actually going to go bankrupt right before Apple acquired them for an undisclosed amount, although they did previously have a valuation worth a couple $100 million. Currently, it's been reported that Apple has been testing their autonomous driving softwares with Lexus cars in California, and they also purchased the vehicles that Drive.ai was using for a shuttle service out in Texas, but this is one of those secretive Apple situations that we won't really know much about until they choose to reveal it to us. And while I have no idea when that will be, I think just knowing that Apple is behind it should prove it to be something of substantial proportions that'll likely benefit from the growing autonomous vehicle market that is predicted to grow at a compound annual growth rate of over 20% through the next decade, while the autonomous platform market is expected to break north of $2 trillion by 2030, according to ARK Invest. They're also working on a video streaming platform called Apple TV Plus, which we don't currently have a release date or pricing for yet, but it's aiming to be a sort of alternative option to Netflix in the sense that they want to focus more on quality rather than quantity, as is evident in just one of their new shows premiering on the platform, starring 3 high-profile actors in Steve Carell, Reese Witherspoon, and Jennifer Aniston. This could potentially be a big move for Apple, given that the subscription video streaming market is estimated to be worth about $25 billion this year alone, and it continues to get even bigger. Not to mention that Apple still has a few catalysts for iPhone sales growth in the future that they haven't even pulled the trigger on yet. For one, you of course have 5G, which Apple continues to work on releasing a 5G variant of their iPhone that should be pretty successful in convincing their fan base to upgrade their handsets to the newer model. Unfortunately, the earliest predictions I've been able to find are still estimating that it won't be released until the second half of next year, which leaves plenty of time for iPhone sales to remain relatively stagnant for the time being, but once that phone is released, I'd have to assume that sales start to pick back up. And then another catalyst that I think nobody is really thinking about, and just to be clear, this is more of my own personal opinion than anything else, is that I think foldable phones are going to be the next hot trend in smartphones, and there's been new rumors leaking out that they are already working on a foldable iPhone themselves, which I fully believe. There's no way that a gigantic company like Apple isn't playing around with their designs and looking for the next big trend, which could potentially keep those sales climbing even higher after the 5G release. And all the meanwhile, Apple is already making progress in diversifying their business, given that their services revenue continues to surge higher, with the last quarter seeing it climb by over 16% year over year, as their second largest segment only behind iPhones, while their fourth largest segment of wearables, home, and accessories climbed by as much as 30% year over year. It's also worth noting that they had over 390 million paid subscriptions in their last quarter, which they are on track to continue growing at a double-digit percentage as they surpass 500 million next year. So for me personally, when I look at Apple, I see a company that is definitely going through some short-term issues right now, and I don't really see those issues going away anytime soon, but I like the fact that they are diversifying and trying to solve those problems for the long term. I still have not purchased the stock yet, and that mostly has to do with a lack of clarity in terms of what their future will look like. But I have to admit that as the stock continues to get dragged down lower, and if these issues become a little bit bigger and drag the stock down even lower in the next year or 2 years, then I think the stock becomes even more appealing, even more attractive. And at this point, I already consider Apple to be a little bit of a value stock as well, despite the fact that, again, it's one of the biggest companies out there and one of the most popular brands and also stocks to invest in. So just to kind of wrap everything up, I think these issues in the short to kind of medium term will probably continue to weigh on the stock and on their iPhone sales. Even though we got some good news out of the whole trade war front, I still think that we're like one negative tweet away from the market kind of selling off, and things could just escalate at any moment like it has in the past. But I think we are getting closer to a trade deal, and I'm still optimistic that we do get a trade deal either this year or very early next year. But there's always the potential that we don't. And at the same time, China is still struggling as an economy themselves. So we really need to see them improve on a fundamental level before I think that we're going to see iPhone sales really start to pick back up in a meaningful way. But looking out into the future, again, 5G, foldable phones, there's a lot of catalysts for iPhone sales, and the fact that they're diversifying into some big markets that I think are going to surprise a lot of investors who may be kind of brushing them off. I think they're actually going to be a big deal for Apple in the future, makes this a very compelling stock. For me personally, my portfolio is still very tech heavy, so I'm not exactly eager to buy the stock right now, and I think we could potentially get some lower prices in the kind of short to medium term. On top of that, I also kind of, this is not really a huge deal, but for me personally, I actually set up my girlfriend's portfolio for her, and I forced her to buy a lot of Apple stock at the end of last year when it was really like crashing down very low. And so she's actually up on her position quite a bit right now, but it's her second largest stock. So I kind of see my exposure to Apple being through my girlfriend's portfolio for that reason. So again, I'm just not really eager to buy Apple stock myself, but I still think it's a good stock for the long term, and I think anybody invested in it will probably still have a lot of success. But that's just my opinion. Let me know what you guys think down in the comment section below. If you enjoyed the video and you want to see more stock analysis videos in the future, make sure you hit the like button and leave recommendations down below. And I think that's about it, so I'll catch you guys in the next video. Thank you so much for watching. Take care. Bye-bye.